Hi, today we're going to be reviewing the Limners and Bards Limited, ticker symbol the Lab, on the Jamaica Stock Exchange Junior Market. So let's go.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome back. I'm going to open up in prayer. Thank you, Lord, for this day. Thank you for the ability to learn, grow, and invest. I pray, Lord, for wisdom, knowledge, and understanding in Jesus' name. Amen. All right, everyone. So welcome back to another stock review. Today, as I mentioned before, we're going to be looking at the Lab. So before I start, I want to mention the stock review is sponsored by JMMB Moneyline. And let me do the usual disclaimer. Anything that is said here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities. Right here at L.E.A.R.N Grow Invest, we are actually financial coaches, not advisors. So we can guide, but we can't direct as to what investment options you should take. All right. So let me get right back into it to explain our format. Well, before I do that, I'm encouraging you all to join our community. So we have community groups on LinkedIn, Facebook, and Telegram. Feel free, the link is in the description of this video for you to join our community. So the format for the stock review is going to be as follows. So we usually go with an overview of the company, help you to understand a little bit about it, talk about the history, when they would have came to the market through IPO. Then we look at the financials, right? Just a summary of maybe the last 3 to 5 years, if we are able to get that data. And what we're going to be doing is just showing you high level, just some things that have stood out to us. We're not going to go deep into the financials. We're just going to give you a very high level. Then we look at the most recent financials, right? Whether that's the annual report or the quarterly report. In the case of the Lab, we have the 9 months report. I think that's ending June 30th. So we're going to look at that. Then we're going to look at the price history. And since this is sponsored by JMMB Moneyline, we're going to be using that platform to go through the price history. I'm going to talk about the dividend history next, and then any news that is relevant to the company. All right. So that's our format. If you have any questions, just feel free to leave them in the comments below the video. So let's start with the overview. So the Lab is a strategy to execution, full service advertising agency and production house. The Lab previously operated as 3 distinct business units, but recently would have changed it to 4. So those 4 areas we'll actually go through on the next page. Their creative services include production, which is their core service. So they conceptualize, script, project manage, shoot, edit videos and content for both corporate and entertainment clients. The advertising agency arm covers integrated marketing solutions for brands. Their media arm builds and executes purchase of airtime and placement strategies for traditional and social media platforms. And their content arm is aimed at creating brand content as well as homegrown content such as docuseries and films. So just about anything that you can think about in terms of, you know, these main areas. Actually, the next slide goes into it a little bit more. And, you know, of course, before we move forward, we do have the CEO here, Kimala Bennett. We're hoping to be able to get an interview with her soon, so stay tuned for that. In terms of the 4 areas that I mentioned, you have them on the screen. So if you think about it, they do cover a wide range of what would be considered a media and production company. So a lot of the locally known brands, I've heard brands like Digicel, Grace Kennedy. I've seen their ads to include, I think, you know, I don't want to misrepresent them, but definitely a lot of good local brands, well-known brands they have worked with. So this is just an overview of what they provide. their prospectus was released on June 28, 2019. Their IPO came out at a price of $1. They had two main tiers of shares. That's the public and then the reserve pool. So 50 million shares were made available to the public. 139 million shares were in the reserved pool. That includes, employees, key partners, industry, and the broker allocation. And then their use of proceeds was mentioning, I think, about 6 key areas. That's, growth of the company. They're looking for acquisitions at the time, regional and international expansion, as well as investing in their PR and digital, building out that area. So that was the focus of their IPO, and they would have allocated the funds and used them accordingly. So we'll get into how the price has been trading, how the stock has been trading when we get to the price history. But this is just an overview for the history of the company, right? Short and sweet. We're gonna get to the financials now. So what we do here is we just wanted to highlight just some of the key areas when we put together the financials, the things that stood out to us. Now the feedback that we got is that some persons were a little bit intimidated seeing all those numbers, so we're using charts instead. Let me know if this is actually better for you. Give us your feedback through the comment section and let us know if this works for you. So what we have here is their revenue versus gross margin. So we're seeing where their revenue has been consistently growing. So I think they're at 1.2 billion now. But as you see with this graph, their gross profit margin has actually been declining. So it's been the lowest it's been in the last 3 years or so. So we're going to be watching to see where they are in terms of their 9 months to see if they are going to have an improvement on that or it's going to be going down further. Next, we have selling, general, and admin expenses. Now, based on it being a service-based company, we anticipate these expenses to be high. As you see, it's been trending up over the last few years. So this is something definitely you want to watch because it would impact their profitability. Next, we have basic EPS. Now, their EPS has grown since 2018. Of course, 2018 would have been before they listed. So we're focusing mainly on 2019 onward. So this is where we are, and I'll get to, I think their most recent EPS would have been 16 cents. So that's where they would have ended last year. So we're looking to see again how they're going to be finishing out the year. And yes, I do see Rennie in the comments saying if the slides do look blurry, be sure to change the resolution of the video. We are streaming in 1080p. So if you select that quality, you'll see the slides a lot better. Next, we have cash and cash equivalents here. This is definitely good to see. Their cash has been increasing. Cash, of course, as you know, is important. Cash is king, especially, over the last 2 years. So seeing them build up their cash position is very good. They are going to be able to meet their short-term commitments, pay those payables that are owed, etc. So this is definitely good to see. And then we have retained earnings, which has been growing as well. So this was a position as at last year. Their financial year actually ends in October. So what we have here are just the data from the annual reports. And as I said, we're going to get into the 9 months financials soon. This is their retained earnings position as at the end of last financial year. And we look at that number again when we get to the 9 months financial. But again, steadily increasing. That's good to see. Retained earnings are where you'd get your dividend payments from or things of that nature. So it's good to see that that position is being built up. And then finally, we definitely want to look at, in terms of cash flow analysis, free cash flow, which has been increasing as well. And this gives us an understanding of how the company is able to manage, again, how the company is managing their cash. So once we see this trending up, this is definitely a good sign. And what we have as well are some key ratios that we wanted to share. So return on assets ended 2021 at 11.5, and the last 12 months, 11%. Return on capital, 21.7% last year, currently 23.6%. Return on equity, it's currently at 28.4%. And what you notice for all of these return ratios, they've actually been trending down from 2019 till now. Again, we're focusing on the year that they listed because the share position would have been different in 2018. So I didn't think it would be a fair comparison there, but that's what we're seeing. In terms of their margins, definitely an area that we're looking at in terms of profitability. So their gross profit margin, as I said, would have been trending down, but we see for the last 12 months, it's 33.7%, which would actually match the year before they listed. So let's see if they're able to have an improvement on last year there. SG&A, as I mentioned, is based on the type of business. This increase might have been anticipated. They did have a new division added. So that's something that I guess we just want to see that managed as best as possible. We don't really get a breakdown. Well, I'm going to check the annual report to see if we do. I actually didn't check it before we did this review. So I'll check to see if we have that breakdown to see maybe where the key expenses are. But since it is a service-based business, that is understood. And then finally, net income margin, and an area that we definitely want to watch, is currently at 11.3%. It would have ended 2021 at 12.7%. So the year that they listed 15%, and it's down 20% pretty much. So that's something that you do want to pay attention to. I'm not sure, and this is one of the questions that I'm definitely looking forward to asking Kimala, is what goes into which product lines are more profitable, how it is that they see profitability possibly increasing with the type of business that they have, things like that. So that would kind of give us some more insight into these numbers, right? But of course, the ratio analysis are just giving us information based on raw data. Next, we have turnover. So we're looking at receivables turnover and then working capital turnover. So we're seeing those numbers there. So last year would have been 6.68 times. And then working capital turnover is 2.67. So working capital is pretty much within the same range. It's between 2 to 3 for the last 3 years. And receivables turnover has actually been moving downwards. And then short-term liquidity, because they have no inventory, based on type of business, the current and quick ratios are going to be the same. But you do see where they do have enough cash to cover their short-term liabilities, which is good. That's one of the things that we're looking at. And average days payable outstanding, that's their accounts payable, is 61, or I guess around 62 days, right? And in terms of liquidity and solvency, we're seeing total debt to equity 21.3%. The last 12 months is 18.7%. And then total liabilities compared to assets would have been 36% at the end of last year, but shaping up to be 42% for the last 12 months, right? So this is the financial analysis. We are going to be looking at the 9-month statement. Let me see if we're actually going to be doing that now. Yes, let's do that now quickly. So this is our statement ending July 31st. So a couple of things that we're going to be pointing out here. So I did mention some of these key ratios before. So we spoke about the ratios, so I don't need to go into that. In terms of the 9 months, that's 1.1 billion in revenue, gross profit around 379 million. And then we have net profit currently at 144 million, right? And then we're seeing that in comparison to the year last year. So based on how things are looking, they are shaping up to beat revenue for last year. Let me actually zoom in just a little bit. See if we could see just a little bit better. There we go. So that's definitely a good sign. But of course, we're looking at gross profit margin to see how that ends up, and then ultimately net profit. Right. So let's see what the notes say here. So the results of their new subsidiary company, that Scope Caribbean Limited. Now, this is a company that was that is formed to work with influencers, creators, etc. More on that a little later. So it's saying here that the company is now fully integrated into their accounts. So while Scope recorded a $2.5 million loss, they've seen greater take-up of the services offered, and they expect more clients to come on board. So this was kind of launched to the public sometime last year. I tried to find some information on the website, watch some videos explaining what Scope is. I would definitely love to interview them to learn a little bit more about the company and what they do. But as I said, they work with influencers, creators, connect them with brands, etc. Right? So it says here revenue was up. We mentioned that before. They seem like they're going to surpass last year's total. So that's a good sign there. Revenue growth attributable to increases in company's core business. That's media placement up 18% and advertising up 53%. Production was flat compared to the prior year. Gross profit increased by 95 million or 33.4% over the corresponding 9 months of the prior year. Due to tight cost management, gross profit was 34.2% compared to 30% the prior period. So that was one of the things we mentioned that we're looking at, right? There was a 1.5% growth in net profit. And let's see here, the increase in net profit was attributable to increased revenue and gross profit. This group result is impacted by the $2.5 million loss. Okay. Net profit includes finance income. All right, I'm not going to get into that. I wanted to talk about administrative expenses. So those increased by 70.2 million, right? So that's 44.6%. That's one of the things, as I said, we wanted to highlight because that was very noticeable to us. These increases are primarily attributable to staff costs as the company builds out capacity to be able to meet future demands. So that's going to be a current investment with the anticipation that they'll be able to grow revenues as a result of that. But it's something to watch, right? Having your admin expenses increase by 70 million is no small thing, right? And this is speaking about their assets. So let's talk about outlook. Let's see if we get any value from this. So as we enter the post-COVID era, we continue to observe relevant protocols, and our team members continue to be vigilant. Scope is showing promise for growth, and we continue to explore avenues as we place Scope in a position to maximize returns. So one of the things I did notice in the interview that I think someone from Scope, I think it was Naomi Garrick, had with Kalila, she mentioned where in terms of the service Scope offers, it appears to me anyway that they get revenue from the brands and not necessarily the influencers that they work with. So this is something that I guess they're kind of building out for the future. As I said, I'd love to understand how exactly Scope is doing, what's their projections for maybe the next the 3 to 5 years. If it's currently at a loss, let's see where it is at the end of the year and so on, right? Negash, so I agree there, right? With the nature of the business and it being a specialized area, I mean, getting the right talent is going to cost, right? But it's this understanding, I guess, it still needs to be managed, right? Because I guess you want to see a corresponding growth in revenues and profitability, right? That's kind of where where I was going with that. Okay, we're not really getting anything new from the rest of this. Okay, so let me move on. Let me see if there's anything else to highlight here. So we're going to focus on the income statement. That's what I wanted to do. But we actually went through it as well. So we mentioned EPS already. Well, no, I think, yeah, this is good. I think I can move on from here for now. So let's look at the price history, right? So as at today, let me actually remove myself here. So as at yesterday, because I put this slide together yesterday. So it's just down week to date, month to date, quarter to date, down 1.48%. Year to date, though, it's down almost 27%, and 52-week range in terms of price from $2.63 to $4. So it's down quite a bit in the last year. In terms of volume, up to 21 million shares traded. I did note that in the quarterly report, almost 91% of shares are held by the top 10. So it's about 90 million shares or 94 million shares available below that. So not really a large amount there, but I guess in context of our market, still a reasonable amount of shares there. And we see market cap and shares outstanding. So let's check on the price here. Can we go to Moneyline quickly? I see that. Let me try one more time. There we go. So we're going to go to stock market summary, search for the lab. There we go. All right, so let me zoom in. Hopefully you can see this here. So as at today, and so one of the things I like to look at in Moneyline would be the last trade. So you can see this information up until 12 o'clock the same day. So not much trades happening today, right? 26,000 in terms of volume. And most of the trades took place between $2.81 and $2.85, right? So that's what we have in terms of the Q. Let's look at in terms of the price. Let's look at year to date. So earlier this year, it did go to 389, and as we see, it's down to 285 as at today. So it's been down, I think, as low as 273 here. Volume, we saw volume of 1.5 million around February 7th. Earlier the year, we saw about 2 million. And the Q, to me, when I looked at it yesterday, not really much. 28 orders in the sell side and about 25 on the buy side. Total volume here, not much, right? So largest order that we see here is 130,000 on the buy side for $2.72. But we do see 1.1 million shares on sale for $3 here, right? I did check to see if this would have been someone from the top 10, but that thing, the lowest person in the top 10 is about 4 million shares or something like that, right? So we do see a fair amount of shares on sale, not really the same volumes matching in terms of the buy side, right? So let's see what that looks like in the next few weeks, maybe depending on how they end the year, what the trading would look like. So I'm very interested to see that. Right. Next, let's look at their dividends. So the dividend yield based on the dividends that they have paid this year and the price as at today, that's a dividend yield of 3%. That is on the lower side. I personally like to see dividends between 7 and 10%. That's just me. I've been a big advocate for better dividends, but of course, companies balance that decision. Do we pay dividends or do we reinvest in the growth of the business? So if you're a dividend investor and you're thinking about, is this a good dividend stock for me? Just understand that the yield is very important. Okay. So 3 dividend announcements year to date. And this is the amount that you're seeing here, right? Next, we have news. So three different pieces of article that I was able to find for them. So this was, as I said, last year, they the incorporation of Scope Caribbean. It's definitely worth checking out if you're interested to learn a little bit more about the company. I'll try to leave those links in the description. Scope Caribbean does have a YouTube channel, but there are 2 videos there. But there are some, articles and news around it that that is there, right? So if you want to learn about it, I did try to sign up on their website to see what type of information I would get. So I'll keep you guys updated on that. So that was announced last year, and this is an article from the Gleaner speaking about them, putting in $15 million into acquisition and operations, right? And as we know, they had a $2.5 million loss this year in terms of scope. Next thing I saw was this pitch perfect competition. I think one of the deadlines, let me actually bring it up on their website here. Where is it? So this is it. So let me definitely need to zoom in on this. So are you a scriptwriter, filmmaker, and big idea thinker? Then they want you. So this is pretty much a competition that you can enter. I think the dates that we have here are applications close October 9th. So if you're interested in that, feel free to participate. More information about that on the website. And then finally, we saw where they're still hunting for the right firm to buy. I definitely wanted to bring up this article here. So let me find that one. So this was from the Gleaner, July 22 earlier this year. So I'm just gonna, focus on the main points, of course. So we continue to evaluate businesses for mergers or acquisition. We have a small committee that looks at businesses for fit before we take them to board. There are very deliberate and clear criteria that they're guided by. So that was pretty much Douglas Linda speaking about it. So the point of the article was that they've looked at some other companies, it has not worked out, and they're still on that search, right? So that's what it's saying here. Between 21 and 22 financial year, they've looked at about 3 prospects, but they didn't meet the criteria. So that's pretty much what this is saying. So they are on the lookout. They have not found any that has worked. So it's just, something that I guess when they're able to find a fit, it will come to fruition. All right. So so yeah, Elaine, so the dividend is a little bit on the weak side. That's definitely agreed. But as I said, in general, dividends in our market are considered weak, right? The ones that are on the upper end are usually between 7 to 9%. And even then, I would love to see a company pay a double-digit dividend, right? Let me scroll through to see if there are any questions. Okay, so I don't think there's anything. All right, so with most businesses going online, how will this affect them? So I think that's actually a good thing now. I didn't take it that they do like social media marketing or management, more like, I guess if companies want to do like marketing, so they may help work on the ads that are a part of the social media campaign, but the social media management, I didn't think they would do that. So the impression I get are, brands that want to be able to manage their brand image, create content, because they have a content arm now. So I mean, depending on, I guess, I don't know the cost for their services, but most of the brands I've heard being associated with them so far are those, kind of larger brands. So I don't know, with those brands would have already had, a budget and been investing in certain types of, marketing, campaign or branding. So I'm not sure with all of those businesses going online. I suppose it would still be good for them. I'm not sure at this point where their areas of focus are. And again, that's why I would love to get the interview, because that would help us kind of put this review in context. So I would say if I were to answer that question, it would more help them than hurt them. So, and And they did mention in their prospectus wanting to expand regionally and internationally. So those things would only seek to favor them. Lost some money on the stock in the IPO and thereafter. So if you see you lost some money on the stock in the initial IPO, what price did you buy is my question, because the IPO was $1. So, and it's $2.85 now. So how much did they lose? That'd be interesting for me to see. Yeah, I would definitely want to understand that again, and that's why we do the CEO interviews, because those help us kind of frame what the reports and the numbers show. I don't want to understand it because, yeah. So there would be more content development side for social media rather than management. I agree. That's kind of what I see, right? Yes, Renee is asking you guys to let us know this format. So we try to condense the review in 30 minutes. So let us know if that works for you. Let me know if it feels rushed or not. What is their market share? I don't know how we measure that, right? Where would we go to find that data? I don't know. I didn't see anything of the sort in their annual report in terms of market share. That would be interesting to know. I'm not sure how we would track that though. So Nikesh, I've been speaking with Kamala. I haven't gotten a confirmation as yet. We're tentatively booked, but we should have confirmation soon, right? So I have been speaking with her, but I'll let you know. Maybe if you put in a good word for us, it will help. So we'll see. All right. Okay, everyone. Thank you so much. I hope you took just a moment to like the video. It really does help our channel. Share this stock review with someone who you know is holding the lab or would have been interested in the company at some point. Really do hope you find these videos useful. Share them. It really does help us out. I'll see you for the next stock review in 2 weeks. We do have some interviews coming up in our CEO series. Be sure to check that out. So subscribe to our channel, turn on notifications, and I'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N, Grow, Invest.